Last month, my investment portfolios grew by more than £2,000 in just 30 days. And to put that into perspective, if you wanted to take home that much money from a normal job after tax, you would need to be earning around £24,000 a year. That is roughly a full-time minimum wage salary. And this month, my money earned that completely passively without me having to even lift a finger. But before we get carried away and think of this as some kind of easy get-rich-quick kind of trick, then I want to be completely transparent with you about how much money it actually takes to make this happen, what I've had to personally put in, and the real-life volatility you have to face to get to this stage in your investment journey. Now, if we look at my actual numbers, I have been building this wealth since December 2021, and when you break that down, 79% of my portfolio is money that I personally sacrificed and put into the portfolio, and 21% of it is now pure profit that the market has generated for me. It is a really amazing feeling to see the portfolio get to this size, but to show you exactly how we got here, let us break down my 4 individual ISA portfolios and look at exactly how they performed this past month. First up is my Stocks and Shares ISA with Vanguard. On the 19th of April, this was worth £28,330, and by the 19th of May, it was worth £29,181. That is £851 of passive growth in just 1 month without me making any new contributions at all. And looking at the history of this specific fund, I have invested £21,011 of my own money, meaning that it is sitting on just over £8,000 worth of unrealised returns. And that works out to 72% capital and 28% profit. So we are close on this one to cracking £30,000, which I am thrilled about, although I am planning to move this portfolio soon because the fees are a little bit higher compared to my other accounts. Next is my InvestEngine Stocks and Shares ISA, which is a much newer pot that I just started over a year ago, and to show the power of really just starting small. So this portfolio is worth £158 today, having gained £4 over the past month without me contributing anything at all. And overall, I have put in £129 and it has returned me £29 of profit, meaning 82% of the pot is my cash and 18% is pure market return. Now, third is my Trading 212 Stocks ISA, which has officially cracked the £30,000 milestone and is sitting at £32,258. Now, I started this portfolio less than a year ago, but I have, unlike the other portfolios, been investing really aggressively into it, putting £27,338 of savings already, which has returned to me £4,921 in profit thus far. And I'll repeat, that is in less than a year. So in the past month alone, the value of this one shot up by £963. But to keep things fair, I did actually make a £200 contribution to this pot last month, which means the true passive growth during those 30 days was more like £763. And that leaves the portfolio at 85% capital and 15% profit. Finally, we have my lifetime ISA, which I hold with Dodl, and this account was worth £8,747 on the 19th of April and grew to £9,557 by the 19th of May, giving me a £410 passive gain. In total, £7,065 has gone into this pot, which includes my own contributions and the 25% government bonus, and it has returned an unrealised profit of £2,092 in just over 2 years, split as 77% capital and 23% profit. Now, it is worth noting that lifetime ISAs, unlike the other stocks ISA portfolios I've mentioned thus far, do have strict restrictions, and since I already own my first home, I actually cannot touch this money without a penalty until I turn 60. But in exchange for that, like obviously restricted access, I got that 25% upfront government bonus. Now, adding all of those monthly gains together and subtracting my £200 contribution to Trading 212, we get a total of £2,029 of passive growth in a single month. Now, how common is a month like this? Well, to be totally honest, this year has been completely unprecedented. And over the entire lifetime of these accounts, my portfolio has returned an average of 15.6% per annum. So what that means is, taking all of my ISA investments to date, the average rate of return has been 15.6% a year. And that is far beyond the historical global average of around 10%. So it's vastly outperformed my expectations. But, because the stock market also fluctuates, you wouldn't actually get that money paid to you in a neat little monthly income. And instead, you're going to get some spectacular months where you make thousands of pounds. And like this past month obviously has been extremely good. But you'll also get some quiet months, and you'll get other months where your balance actually aggressively drops in value. But with all that said, if I hadn't saved up and learned how to invest in the first place, then I wouldn't be in this fortunate position of being able to benefit from the awesome growth of the stock market these past 5 years. I've seen it this past year on portfolios where I've contributed absolutely nothing. They've continued to pull their weight. The values have climbed to all-time highs, and even if I left this £70,000 portfolio alone for, let's say, another 5 years, without adding a single penny, at an average 10% annual return, it would grow to over £113,000. If you want some one-to-one support to help you narrow down your options, build a plan you can stick to, and gain that ultimate peace of mind, you can book a completely free introductory call with me through my website. Thank you so much for watching, and I will see you in the next video.